Morning, Steve Ray in Chicago with the morning grain comments. Well, grains are marginally lower. The three things that I think the grains are looking at, number one is weather. It looks like over the next 2 weeks, most everyone in the Midwest is going to see some rain activity. Temperatures will be normal to above, but crop conditions should stabilize. Some areas may get less than others, and so we still have to watch July weather to figure out what the final U.S. corn yield is. Some harvest is going on in the southern plains. Wheat yields are near, maybe below expectations, but prices are below break even, and that's beginning to affect land values down there as they drift lower. Farmers there are planning to plant soybeans following the wheat harvest and try to offset some of the costs with the higher soybean revenue. Number two is the virus. It continues to spike here in U.S. southern states that reopen and in parts of Europe. And so that begins to offer some resistance to the equity markets, the energy markets, and even the commodity markets. And then finally is demand. We get some export sales data today and probably should show paces below levels that we need to drop the U.S. carryout, especially if crops are good here. Seasonally, corn usually makes its top at this time of the year, while soybeans tend to make it in mid-July. So when you look at prices, especially in corn, near season lows, it's kind of hard to imagine corn going lower if there's a rain. But end users continue to be on the sideline for the most part, thinking that corn, soybean meal, soybean oil, and wheat prices are going to drift lower this summer if the weather is okay. And the U.S. farmer is sitting on a record amount of unsold corn, hoping for some kind of weather rally. Certainly the demand side of things as far as China is concerned is up in the air because of this guarantee that shipments are virus-free. Some countries, even some companies, may be willing to sign such a document, but we just don't know how that's going to affect things. And finally, IMF yesterday lowered their estimates of global economic to a negative 5% from 3%. They do expect 2021 to increase 4%, maybe 5%. In the U.S., they dropped growth to negative 8%, and they expect 2021 to be a 4% gain. So again, the virus is impacting economies, and hopefully with a vaccine or safety measures taken, social distancing, masks, things like that, the economy can turn around. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, treat people like you would like to be treated yourself.